Hey everyone, I'm not a bull or a bear. I'm just trading to make money. And that's the way you have to be, or at least I have to be in the current market because the market currently is insane. It is swinging wildly from one side to the other. So there's no consistency with this market. So I'm just going to follow the trend, and I'm going to bag what money I can. And so far this strategy has been successful. This is simply how I'm trading my stocks and is not financial advice because I don't know your personal situation and everyone is different. I went in on 24 stocks. A few of them were home building stocks. Most of them were artificial intelligence related and certainly technology related. And I made good money on that. I made $150,000. But of course, like all rallies and all portfolios you set up in this market, it will not last. And this has been the case ever since we've had health problems. Since 2019, it hasn't been possible to hold a consistent portfolio. You have to trade in and out of it. Uh, at least I have to trade in and out of it, and I've made a lot of money doing that. I made 900,000 in the year after they started jacking up the economy unbelievably. In 2022, I made about 350,000, and then this year so far, I made 150,000 on the artificial intelligence stocks swinging up. But then, of course, that rally had to fall out too. All good things must end with this crazy market we have because we have an economics that has never been tried ever before in history. They literally replaced the economy with Federal Reserve printed money, which has never been done to that extent. And so you are in a one of a kind situation. And so all I can really do is just flow with the situation, go with the trends. And that's what I've been doing. And it's been successful. I'm 120,000 ahead so far this year in spite of the big dump on artificial intelligence stocks in the last 10 days or so. But I would have lost it all had I stayed in. That's the way this market is going. I mean, Tesla, it's sort of the ultimate artificial intelligence stock. It really took a dive on Monday. It went. It was in the 270s. It was heading towards 300. It looked like 300 was in the bag, okay, but not in this market. Tesla went down to $241. Nvidia, it was in the 440s at one point, and it's down to $406 after Monday's session. So I think these are the leaders. They determine what the market's going to do. You want to keep your eye on them. It used to be Apple and Tesla, but Apple has turned into a safety stock, and it's in the 180s, and it's sort of hanging around in there, but it's not going to go up much. It's just benefiting from being seen as the ultimate safety stock in this wild market that we have. So Tesla and Nvidia are definitely the stocks to keep your eyes on. I think it's almost delusional the way the market has priced things. Uh, People that are trying to get in on artificial intelligence now, hoping it'll turn around, I think that's a fool's errand. That's not going to work. The Federal Reserve is now intent on making sure the stock market does not go forward. And they're going to announce a rate increase. There's more than a 70% chance they're going to do that at the July 26th meeting. We have the PCE coming out on Friday, and that's that's personal consumption expenditures, and it's going to come out in the threes. It's the Cleveland Fed is predicting that it's going to come out at 3.23, but the core inflation, which excludes energy and excludes food, groceries, is going to come in around in the fours. 4.44% is what the Cleveland Fed's nowcasting is predicting. Trueflation is indicating that we're going to get inflation in the 2% range at some point here. But I don't think the Fed trusts that, even though it's more current and uses more sources of data. And the reason why is that can just totally be blown apart if the price of oil goes down. Right now, the price of oil is in the 60s and 70s. You know, Biden, he sold oil when it was $120 or so. He's turned out to be quite the oil trader, because now he's refilling the strategic reserve, and he's filling up with oil that's in the 70s and the high 60s per barrel. So he's getting it for half the price he sold it for almost. So that's really turning out to be a good thing. But the market is in a delusional phase simply because now they're finally realizing, oh, Powell isn't going to cut rates, okay? And he's been saying that over and over. I don't know why that isn't believed. But I think there was some feeling, well, maybe he would be forced to cut rates. But let me tell you, if he's forced to cut rates, that's not a good thing. That's not a good situation. That's not something you want to happen. That is a disaster, because that's the only way they're going to cut rates. And stocks in that case will just go to the bottom. So that's not good news. The fact is that things are much worse in Europe and other countries than they are here. I mean, England's trueflation right now is about 13%. Turkey just raised its interest rate to 15% from 8.5%. Wow. You know, we think we worry about a half point increase, a quarter point increase. You know, they more or less doubled their interest rate. Europe markets are down. China's markets are down. The United States is going down, but I think part of the reason we're going down is because they're going down. Europe is a major market for many products we sell. For example, Apple's second largest market is Europe. And so how am I trading this market? I think since there is no trend that the Federal Reserve is going to allow, you're more or less left day trading, or at least I am left day trading. And what I'm doing is I'm determining the trend of the market, whether it's up or down. Usually you have a phase in the morning, the first hour and a half of trading, the market comes to some kind of decision what kind of day it's going to be, whether it's up or down. And I trade lightly during that phase, and then later on I increase my trades in whether I've selected SQQQ, which is betting that the market is going to go down because it's a triple leverage inverse fund on the 100 largest companies in the NASDAQ, the QQQ. Or I do the TQQQ, which is a bullish fund, which is triple leverage, and it 3 times the gains of the QQQ, the 100 largest companies on the NASDAQ. So whether I'm going to trade TQQQ on an up day or an SQQQ on a down day is usually determined within the first hour and a half to 2 hours of the trading day. Although that can change later in the day, because you never know if this market is going to whipsaw around, which it's famous for doing. So what I've taken to doing, I'm doing relatively small trades for me. what I'm doing is I'm trading about 5,000 shares at a time. And on the SQQQ, which I did Monday, I do about 100,000 shares at a time. And if it goes down, I put like a 3% limit on it going down. If it goes down 3%, I'm out. Okay. And sometimes before that, if I just get the idea, I made a mistake. Preferably, if I'm doing it right, it should go up immediately when I trade. Simply because if I have a confirmed belief, I have reason to believe from the way the market's acting, it's going to go up. If it goes the opposite way, that tells me my guess is wrong, and I get out immediately, and I lose maybe $50. Okay, but if I'm right, and typically I am, on 7 trades on Monday, I was right on 5 of them. Okay, and that would be a typical day for me, and I made about $3,000. So if I can make $3,000 during these current conditions, I'm happy with that, because that's the way this market is. And I'm risking a small portion of the more than 2 million I have to trade. So it really is a nothing burger. But I don't think we're going to be able to trade long term until the Fed decides that they're going to stop increasing rates, at least that. Right now, there's more than a 70% chance they're going to raise it in July. But I think what's being argued is whether it's almost for certain they're going to raise it at least one more time, 0.25%. Okay. I think what's being debated now is, are they going to raise it once or are they going to raise it twice? And I'll give you the formula for if they're going to raise it twice. They're going to raise it twice if the stock market goes up. This is all a reaction to the stock market going up. It is a thorn in his side because he knows if the energy prices go up, that good progress on inflation is gone. That's the main reason why we're Trueflation is saying we're in the 2% range now. It's because the price of oil has gone down. But that can go away in a heartbeat, and Powell knows that. And so they're focused on core inflation. Right now, the Cleveland Fed, they're now casting is saying that the CPI that comes out on July 12th, the CPI is going to be about 3.22%, but that isn't the problem. That's good that that's in the 3. The problem is the core inflation. The core inflation has not decreased in about 6 months. It's still at 5.11%. That's their prediction for what's going to come out in July. So part of it is Powell is fighting the stock market. He doesn't want that to increase. But also they want core inflation to go down because they know that the energy and food, if that goes up without the core coming down, that we are really screwed. Okay. And so he's got the two forces pounding on him, the core CPI probably coming out in the 5s. And I think he also worries about the price of energy eventually picking up. And I think he's also worried about the run in artificial intelligence stocks that we had, where I made $120,000 even after getting beaten down $30,000. He just can't have good news on the stock market right now. And so I'm going to play it. In golf, they have a saying, you have to play it where it lies. Okay, this is where we lie. It's going to go down. It's just whether we have one rate increase coming. We have that coming for sure in July. It's whether we have another one after that. And there's something unusual that's come out and caught my notice. For about the last year, I've been hearing about PayPal. and what a bargain it is. And man, you better get in on PayPal. And in the year to date, in the last year, it's gone down from about $100 to $70. I'm not sure about the time period, but it's gone from $100 down to $70. Okay, and its price to earnings is only about 14. What a deal! You should get in on that. Why hasn't it gone up? Nancy Pelosi and other members of Congress know why it hasn't gone up. They have a thing called the Fed Now. Fed Now. And I'm going to play a clip when I stop talking. And it's going to tell you what Fed Now is. But to me, it looks like Fed Now could be a replacement for payment services, for credit cards, and ultimately for Bitcoin, because it immediately hooks up your bank to a business and you can pay instantly right now. And that's why they call it Fed Now. I'm gonna leave you with that. I think Nancy Pelosi and other members of Congress have been selling their shares of PayPal simply because they know this Fed Now is going to start coming into play in July. That's when they kick it off, but it'll be developed further after that. And it all depends on they don't say what the fees are going to be with it or how that's going to be. If there are no fees or minimal fees, I think it takes over everything. The trouble with crypto is there's so many crooks with the different exchanges. There's so many crooked things that have been happening, and we can't have that. And if you can have the same, verified payers, verified buyers, and you get the crooks out of the way, and you can pay in an instant, I think it replaces a lot of things, including credit cards, if their fees are lower. Now, I don't know. Credit cards will probably stick around because the Fed Now won't extend to everything around the world, of course. And so there'll still be a need for credit cards. But I think this Fed Now could take a substantial chunk of all the payment services businesses.
The FedNow service is an instant payments infrastructure that financial institutions can use to clear and settle payments instantly, either on their own or with the help of service providers. Financial institutions provide their own access interface to their customers, such as a mobile app or online banking portal. The FedNow service operates between financial institutions, ensuring transactions are settled securely and instantly. In this simulation, we'll look at how one financial institution, ABC Bank, is enabling customer access to instant payments. Kevin, an ABC Bank customer and small business owner, wants to send a just-in-time payment to his supplier using ABC Bank's instant payment portal. First, he keys in the amount of the payment, $1,000. Then, he selects which account he would like to have debited for the transaction, for instance, his checking or savings account. Next, he indicates where the payment is going by entering the routing and account number provided by his supplier. This information allows the FedNow service to route the payment message to the correct financial institution and customer account. Financial institutions that participate in the FedNow service determine what additional information end users can provide, along with the payment. Kevin sends the payment. Within seconds, ABC Bank sends a notification to Kevin, informing him that the payment was successful. This step is optional for ABC Bank. What just happened behind the scenes? The FedNow service settled the payment between Kevin's financial institution and the supplier's financial institution in real time. Here's how it worked. As soon as Kevin initiated the payment, his financial institution sent the payment message in ISO 20022 format to the FedNow service, which confirmed the message met specifications. Next, the FedNow service sent the payment message to the supplier's financial institution, which replied by confirming it intended to accept the funds. This reply is meant to reduce misdirected payments. At that point, the FedNow service debited the Federal Reserve Bank master account of Kevin's financial institution and credited the Federal Reserve Bank master account of the supplier's financial institution. The FedNow service then provided a confirmation of settlement to both institutions. Next, the supplier's institution made the funds available to the supplier immediately and chose to notify the supplier that it posted funds to the supplier's bank account. At the same time, ABC Bank chose to notify Kevin that his company's payment was settled. There are so many ways customers can use instant payments. Businesses, for example, can use them to buy inventory or for their payroll. Consumers can make major purchases, such as buying a car, or use instant payments for everyday transactions, like paying a restaurant tab or utility bill, or moving money from one financial institution to another. The possibilities are endless. In the future, the FedNow service may support alias-based payments through directory services, which will make it easier to send and receive payments using an identifier, like an email address or a phone number. To learn more about the FedNow service, visit FedNowExplorer.org or contact your Federal Reserve Relationship Manager. FedNowExplorer.org.